Is it a struggle? Yes, we have to realize our strengths and our weaknesses. Hi, and welcome to YYNet with Janice, and I'm your host, Janice. Today, we have a great guest in the studio again, Susan Pfeiffer. She's a senior home mortgage lender at NuMark Credit Union. She's been on our show a few times before. Now, this time I asked her to come back because during COVID, we're having a lot of people having issues getting refinanced. So our topic today is home financing during COVID-19. Welcome to the show, Susan. How are you?
Good. Hi, Janice. Thank you for having me back.
Oh, we're glad to have you. Glad to have you. You always give us such great information. So with the topic today, home financing with COVID-19, everything has changed. Nothing is the same anymore. You can't even go into the banks, it seems like, without appointments to even get financing or even going to go look at a home. A lot of people took their properties off the market temporarily. Okay. So just overall, what do you think of the current market right now? Is it a hot market, a soft market? Where is it?
It is a very hot market right now. Yes, real estate is moving and it's moving very quickly right now. I get phone calls sometimes from past clients that say they're going to put their home up for sale on a Friday just to see what happens. And they call me Monday telling me that it's sold.
Oh, wow.
So,
wow.
Yes. Really cool. And and they quickly need a new loan then to find where they're going to move to. So the market has been very hot. Homes have been going very quickly. Some are going as quick as one day even. Wow. I've even heard some crazy stories about people not seeing the insides of homes and making offers on homes before even touring the inside. Yeah, the homes are just going very quickly. So it's an ideal time for a seller. It's a seller's market. But with the rates at historic lows right now, it's also a great time for buyers to buy because they're going to get an interest rate unlike anything ever before.
Okay. Now, I was actually shocked with this because when COVID-19 hit, that everything was shutting down back in March, a lot of people were saying that they're going to be out of jobs, but then the market went up and people were buying more and more homes. I mean, I was totally baffled with that, you know. So is it even harder to get mortgages now too? I mean, if it's, the market's like people are buying homes left and right, but people are losing jobs, which one is it?
It's a pretty good mix of both, I would say, actually. There's some people right now that they are working 7 days a week with just mandatory overtime. I have several clients that are just working constantly right now for whatever reason, if it's just their market is that busy. I do have some of the other end of the spectrum, though, people that are furloughed or had to, take maybe even a temporary 2-week furlough to help their company. There's been some people that have lost jobs and they still haven't returned to work. So I'm really finding that it's all over the spectrum. Kind of, every family has their own unique situation going on right now is what I'm learning.
Okay. Now, do you think it's the increase in sales is being driven because of the COVID-19? Is it because of the rates so low? Which one do you think is more sparking? Is it just the rates are so low, so people are running out there no matter what?
I think that has a lot to do with it. I think the rates being low, it's definitely a great time. It encourages people to see what they can afford, what they can do. When the rates are, let's just say 2.75 on a 30-year fixed versus maybe the 4.5 that they have in their current home right now, they might be able to move up and get that more expensive home that they traditionally wouldn't qualify for. So you definitely see a lot of people taking advantage of the market with the low rates. But then I've also heard a lot of people just say, oh, my neighbor's home sold, and then another home down the block sold. And I think that curiosity of, is it a good time for me to sell my home? So I think you're kind of finding a good mix of both where people are doing it, just responding to the market. And then there's a lot of people wanting to take advantage of the low interest rates.
Okay. So responding to the market, if this is being a seller increase going up and up and up, that doesn't drive the rates going up if there's so many homes being for sale, the supply and demand.
There definitely is a supply and demand problem right now, and that's basically why it's a seller's market because there's such a lack of inventory out there for buyers. So it can be a tough market for a home buyer in this time, and especially for a first-time home buyer that has never done this before. They don't even own a home right now. They've never lived through anything like this. I mean, we're all experiencing something new right now in 2020, but trying to buy a home in the middle of it, and the problem that I'm hearing from many buyers is that by the time they find a home, they look at it, it looks great, they want to make an offer. Before they even go to make the offer, the home is gone. So it can be discouraging to buyers doing that. Some homes are selling above asking price,
Right.
and that can create this bidding war to go on. And so that can be a little discouraging to buyers too if they've never been through something like that before, if they're not getting that education going into it. This is what to expect. Because if it's your dream home and you don't offer what you need to offer to secure that home, you might lose it to the next person that's willing to maybe go, 5, 10 over.
Now, you people normally, and mortgage representative, don't you normally recommend that people get pre-approved so when they finally do find that house, they can move quickly? Because I would think in a buyer's or in a seller's market, you have to be qualified and you have to show, bam, I can move right away today versus I'm still trying to get prepared. I mean, what do you think about that? Is it best to be pre-approved?
I think I think you're absolutely right on that. Definitely get pre-approved first. And then I would even go a step further and you want to make sure you're spending the time with your loan officer, having some counseling on different price points, maybe something even a little above what you thought you were going to spend just because of the market that we are in. So that if you get into a situation where you may have to offer a little more on a home, you know if you're going to be comfortable with that payment, you know that you're going to afford the home comfortably. So it's definitely, you want to make sure you're having lots of open communication with your lender during this time. And you definitely need to be pre approved because the homes are going so quickly. If you go and fall in love with a home, by the time you go through that pre approval process, there's a very good possibility it's already going to be snatched up by somebody else if you have to wait to do that.
Right. Now you mentioned counseling, but is it harder to get qualified now with COVID-19? Did anything change with the financing? I know some banks had that they wanted a higher credit score.
That's true. There has been quite a few changes. I've heard that several lenders have wanted higher credit scores. Many lenders have raised their minimum qualifying credit score. And so for FHA, 580 kind of used to be that minimum score. You still can find lenders out there that offer it. Many have upped it to 640 right now, though, which is a pretty big increase from 580. And conventional financing as well, it used to be 620, which we still 620 is our minimum. Many lenders have gone as high as 720 to 780 and
Right.
they want 20% down. So we will still offer, we have a program that is 3% down for a first time home buyer. So there are still great programs out there. You just definitely have to do research and make sure you're finding, the right lender to work with. But you mentioned, has anything changed? And depending on your situation, there's been changes. Self-employed people, it's a little bit different right now. There's
Okay.
some added information that we have to obtain from them. We have to get a profit and loss. And
Oh,
that's something that we didn't always need before. And now it could even be, let's just use next year. If it's March, only 3 months into the year, I would need one for those 3 months before I'd be able
wow.
to close.
Oh, really?
So that's something new for self-employed borrowers. Um, if you are furloughed, we have to wait until you go back to work to close. We are not able to close anyone right now that is furloughed. Even our seasonal contractors, you've got different in the construction industry. There are several people that get short periods of layoffs. Well, they kind
Yeah.
of bounce around to different contractors. And that used to be something where we would be able to close no problem. And right now we can't. We have to make sure they're actively working with a contractor at the time of closing.
Even if they're seasonal, I mean, like if it's road construction people, if they're at home like during November to January, so even they would have to wait till they go back to work now. Okay.
Yes, they would.
Now, even when you said with the self-employed people for profit and loss, so that qualify for refinance? Because there's people out there with those low interest rates. They're not just buying homes, they're also refinancing. So would they also need all those profit and loss statements also then? And
That's
the credit
true.
score
So
apply?
right, yes, that is true. Even people that are refinancing. So the guidelines have kind of changed across the board, whether it's purchase or
Mhm.
refinancing. So that rule applies with people being furloughed or seasonal. They do have to be actively with an employer at the time of closing. The same thing with our self-employed borrowers, even if we're just refinancing you to maybe a 15-year or something like that, you do have to have the profit and loss statement. We're going to take a little bit of a deeper dive in than what we traditionally would, just to kind of get a little more information and make sure that business is really sound and stable.
Now, I know people are also refinancing also. Because of the rates are lower, it looks like a good time to refinance. Is there a point where it really is best to refinance versus not? Does it have to be like a 1 or 2 point difference? Or how does that go that it seems like it's sound financial sense to refinance?
That's a great question because that's a question I run into almost daily with many members, people I've known for a long time, and it's different for each person. I like to, like Janice, I don't like the generalizations
Mhm.
when we like to say things like, 1 point, because
Right.
it's very different. If we're looking at 1 point for $120,000 loan amount, versus a $320,000 loan amount, that 1 point is going to make a big difference with the higher loan amount.
Right.
So the general rule of thumb is if we're going down for savings, we need to save at least $50 a month. There needs to be
Oh,
that benefit to borrower.
okay.
Otherwise, it's just not going to be worth it to pay the closing costs because there are costs involved with the refinancing.
Oh, okay. Now, even with that, with closing, even that's changed with COVID-19. People are scared about even refinancing because they think they have to expose themselves to going to a closing into a bank. That's changed too, hasn't it?
It sure has. So we'll talk a little bit about the refinances first. Refinancing, we're kind of doing a mix of whatever's going to meet that comfort level. A couple months ago, it was all drive-by closings. And what I mean by that are title company reps were going into the homes, the notaries that would
Mhm.
facilitate the closings. They would drop off the package at their driveway or at their porch. They would sign all the paperwork. And then
Mhm.
the closer would wait and go and grab it and kind of wrap everything up and then send all the copies. Right
Okay.
now, we're starting to do the traditional closings a little bit more, but it's still at their comfort level. If it's something they're not comfortable with and they still want to do like a driveway closing, we will absolutely accommodate that.
Oh, okay.
And it's changed on the purchase side too, because of course that's such an important day.
Yeah.
Everyone likes to sometimes have friends, family with you at the closing to celebrate, and
Right.
that's not allowed anymore.
Oh, okay. Yeah, because I know I've been to closing. I'm also a broker, and we have the daughter, the mom, the dad. I mean, everyone's there. It's like a big party and celebration, just to sign all these paperwork. So they're stopping that, I guess, because of COVID, correct?
That is correct. Of course, it's the most exciting part of the process. And yes, it's like a party, and only the borrower themselves and their attorney can be there. No family, no friends. I am not allowed to be present at this time. So
Oh,
I basically just keep my cell phone close by, available if you need me for anything. And to be honest, a couple months ago, some people weren't even getting to have their attorney there. Their attorney would
oh,
do a Skype with them on their phone or something, a FaceTime, and
mhm.
they would kind of go through the documents together that way, or their attorney would look over the documents ahead of time and have a copy. So they're going through them at two separate locations. So
Mhm.
the attorney can still explain everything, but they're there kind of by themselves.
Wow. Yeah, I guess that's good that it's changed because I think I would be nervous sitting there and it's like I don't have my attorney and I'm looking at either my phone or a computer. Yeah, can you read this? Oh, that's good. That part has changed at least. It's kind of sad because that is one of the best days people have when you get your home. It's one of the most stressful and the one happiest. You got the keys to your new house. Okay. Well, at least they are starting to do those again. Now, even when people are afraid of appraisals, and I'm also a appraiser. So it's like going into people's homes. Are people more susceptible or allowable for like, I see all the time on the agents listing that they're like, you have to make sure that you're not sick, come in my home, wear a mask, all that's there. Are people more receptive to still allow the appraisers to come in the house for refinancing? And how are the appraisers feeling?
That is a great question. And yes, that has been something that's been a bit tricky through this process. I do feel like that's starting to get a little more normalized now, but we've had some people that just don't feel comfortable having someone in their home. I completely understand that. And there have been some appraisals that we've been able to do that have been called no contact. So they're going basically like an exterior where they're not going inside of the home. And so there are some special cases where your lender might be able to approve something like that. There's also something called an appraisal waiver we might be able to receive, which means that the system is using some online evaluations and they're accepting those values for the property and not requiring an interior inspection either. So sometimes that will happen. Otherwise, I usually tell my clients that, of course, they can have a mask on. Their appraiser will absolutely wear a mask. They come in, they try to get in and out as quickly as possible with as least contact as possible to get that appraisal done. But most people, I think, it really depends. But when you look at it, if they're saving a lot of money, or maybe they just bought their home 3 years ago and these low rates are allowing them to go in 3 years from a 30-year fix to a 15-year mortgage, they're so excited about what they're doing that they'll kind of, say, okay, I'm going to let this person come into my home and take care of the appraisal so that I can get that savings.
Oh, okay. Now, are you seeing a lot of refinancing also? Or is it more predominantly sales? New people buying homes?
I have a really good mix of both. I would say that there's a huge chunk of refinancing going on. There's so much of that happening. Purchase business is always going to take priority, though, as well. For a purchase, that is their new home. The refinances, they already have their home, of course. So, the contract closing dates are what we're going to work off of, and those will take priority. And the refinances, I would say that, right now, refinancing in this market is taking anywhere, depending on the lender, from like 60 to 90 days. We were at about 30 to 45 days, and we just increased that time because applications were not slowing down at all. So we're at about, I would say, like 60 days right now, too.
Now, I know you can't answer this, but I've been hearing that a lot of young people, the people under 30, or at least under even 35 without kids or married without kids, they don't want to buy houses anymore. Is this still a good time? I know a lot of the people, young people under 30, they may still be thinking, I may want to stay in Chicago a couple years, then move to Texas. Is it still an advantage to buy a home and own something instead of wasting the money, in my opinion, in rent?
Oh, I absolutely think so. Because even if they are renting, they're still paying a mortgage. They're just paying their landlord's mortgage. They're not paying their own mortgage. So, in my opinion, real estate will always remain one of the most sound investments that you can make in yourself. You're investing in the place that you live as well as investing in your future. I think it's a great time with these rates so low. I mean, the rates are, under 3% primarily for a 30 all the way to down to a 15-year. I don't think there's ever been a better time to buy a home right now.
Right. No, I think so. I mean, the rates are great. Only thing is, like we've noticed, we talked about briefly, that it's becoming a seller's market that it's a buyer's war. It's like people are I just sold a home in November last year, and we've had over 15 contracts, and that was in the first 48 hours. It was like, wow. It was like, boy, if I just had a few more houses for these people. But it's like, it's more and more going on like that. So how is that affecting, even here's the seller getting ready to go sell their home, but now the house they may want to upgrade to is so high. So is it still, I mean, are they still being okay to go to the higher up homes? The jumbo?
Yes, that's a great question. Yeah, there's still a jumbo market out there, and there's still a lot of financing available for jumbo homes. And we are seeing, I think that that's really the active market right now is probably, gosh, anywhere from like 150,000 to 750 is just where the market's crazy right now. It's just, there's just not enough homes. And that's what the biggest problem is. And, many people, what we're seeing, they're offering above that list price. And when I say above, I've gotten some contracts where they're going 35,000 over an asking price.
Yeah, we were over 10,000 over the asking price. I was like, wow, yeah, we did go that high for my client, which I'm happy for them. But yeah, it wound up being a buyer's market. And so not a buyer's market, a seller's market, but a buyer's war. I mean, we could have just thrown the keys on the lawn and had them fight for it. That's how bad these people want to home, and I think they would have started fighting for it. So definitely people need to come in.
That's how it feels.
people definitely need to come in, talk to the loan officers, get some counseling ahead of time. Make sure you get all your paperwork done or the pre-approval done. Now, do you have to check the buyers like a couple of weeks or something before closing to make sure a day before closing that they still have their job and everything? Because I'm thinking things are changing drastically when it comes with COVID-19 with businesses closing.
That is a great question. So, and that will pertain to people that are employed through a company as well as self-employed borrowers. So, one thing that I didn't touch on when we were talking about some of the changes is what happens right before closing. And right before closing, we have to get most recent final pay stub. And this is going to be whether you're refinancing or if you're purchasing. So, right up front, I tell my clients, plan on giving me whatever that one that'll be. We'll let you know when we get closer to, but I will be asking you for one more pay stub right before we close. And then depending on their situation, we may need to also do a third-party verification, as well as something like I was mentioning for the business. So that business will have to go through the month leading up to what month we're closing in to show that the business is still, nothing's jeopardized with the business and the business is still on track. And there are some additional questions. There's kind of like a little questionnaire that self-employed people have to fill out about their business, just stating if what has happened during COVID to their business, if they feel like there have been any adverse effects, what they have been, or if business has been as usual. They kind of have to explain like a questionnaire.
Oh, wow. That is definitely something. I mean, I would think that would definitely be a need for that, because if you had your heart set on the house and then all of a sudden, week before closing, your market tanks or anything, we need to know for mortgages, are they going to be safe loaning to these people or not? Yeah. Now,
Absolutely.
absolutely. Now, besides even talking about that, about things changes, let's get back or change to forbearances. There's a lot of people because of COVID-19 that are there options that if they can't make their payments or if they go on a refinance, how do they go about that if they needed a forbearance because they lost their job or cutback?
Great question. That's a great question. So, as far as I know, all mortgage companies are allowing forbearance due to COVID. They can skip, I believe it's at least 3 payments up to, I think, 6, depending on the lender. It's not going to negatively impact your credit if it's COVID related, which is great. So,
wow.
you basically what they do is, they just take those payments and they put them on the back end of your loan. So they don't do anything else with your term of your loan. They're not changing the term like they would during a modification. It's a little bit different. So that is one option to someone that has lost their job, or maybe they've gone through a long period of furlough and they need that additional help if they can't do an actual refinance. Now, one other kind of thing that I'll point out that we're talking about the forbearances, I have had several clients that have taken advantage of the forbearance because it was there for them to take advantage of. And then after doing so, they'll come and want to refinance to maybe a 15-year or a 20-year. And we do have to show that those forbearance payments have been brought current before we can do a refinance.
Okay. Yeah, I guess that would make sense.
And it depends on the person. Somebody that's in a position where they maybe didn't need the forbearance, but they just did it kind of because they were able to, that's typically who we'll run into that also will want to refinance. And so typically they are in a position where it's going to be okay for them to go ahead and bring that current so far. They understand they were just taking advantage of what they were able to, and now they want to refi. And so they bring it current, and then we're able to move forward. But anyone struggling with your payments, I would say right now, reach out to your mortgage company because there's absolutely resources for you, and you can get help if you reach out to the mortgage company. The sooner you reach out, though, and let them know that you're struggling and you need help with your payments, the better.
Right. Right, definitely. That makes most sense. It really does. Now, even with that, with refinancing and forbearances, that you said that does not hurt them if later on, say a year from now, they want to go buy a house or refinance, that won't hurt their credit or their relationship with like the credit union or a bank in refinancing?
Not at all. Okay. Nope, they'll definitely still qualify to buy that future home when they're ready. It won't impact them negatively one bit.
And those forbearances, are most of them stuck on the back end of the loan, or they have to pay it up when the 6 months is due? They have to have that large sum in the 6 months to pay it up.
So for my company, at the credit union, they put it on the back end, and I mean, they can pay extra anytime they would like to on it, but they're not required to. So when the loan comes due, that's when those funds will be required to be due as well. Now, when they go to refinance or sell, of course, it's all going to be included in their payoff.
Yeah.
And I have had some people tell me that they're just going to basically pay a little extra every month and try to get it paid off sooner.
Okay.
So I do think there might be other companies that do it a little bit differently, but a true forbearance, they're not going to change the other terms. They're just going to stick it on the back end of the loan.
Now, do the banks normally charge to do a forbearance?
We don't.
Okay.
There might be some processing fees involved with other companies, but that's one great thing about a credit union because we are for the people. You're already experiencing a hard enough time as it is. We're not going to, charge you to take advantage of something like that.
Okay. And a lot of people don't even understand about credit union. Could you even give us like a minute to at least tell us people about credit unions, why they're important and advantages?
I would love to do that. So the biggest difference between a credit union and a bank is the credit unions are owned by their members. The credit unions are for the members. Banks are for profit. And so all of our board of directors are a volunteer basis. We are owned by our members. So at the end of the day, when you have your big banks, your big lenders, financial institutions, they're looking at the bottom line, trying to make their board of directors and all their shareholders more money. And what we're trying to do is help our members through the community by obtaining some sort of service, such as getting a refinance or a mortgage to purchase your next home, or maybe an auto loan or whatever other financial service, we are able to assist you with at that time. So you're going to find lower fees, lower rates, and it's just more of a relationship type banking is what I like to think of it as. You develop those long lasting relationships.
Right. Okay. And at credit union, you can do everything there. You can do refinancing your car, or buying a car. Which a lot of people don't even know about refinancing cars, but we did talk about that on one of our shows before with you. So a lot of different advantages of going with a smaller credit union. And actually, NuMark isn't a small credit union at all. They have lots of locations around Chicagoland. So, and we have put up Susan's information, her email, and where you can contact her at if anyone has any questions about financing, getting ready for mortgages, please contact her. If you can at least give us, and I think we might have a minute or two left, give me at least about a minute and a half, 30 seconds. So guess shorter than I thought we had. So if you can please, 30 seconds, tell me what you want people to do the first thing in buying a home. Your advice.
The first thing you need to do when you're going to buy a home is go get pre-approved. Talk with your lender. Make sure you can afford what you're going to make an offer on. Talk about important things like property taxes. Property taxes are such an important thing to talk about with your lender. Make sure that you understand, is there a homeowner's exemption on the property? Is there not? What does that mean? So there's lots of things regarding that payment and how much money to expect to have at closing. It's so important that you have all those conversations right up front so you go into it prepared, educated, and you're ready to just then go find your home and pick it out, make your offer, close on it.
Okay. Well, thank you very much, Susan. This is Susan Pfeiffer as our guest from NuMark Credit Union. Please contact her, give any information. And I'm your host, Janice. Our topic today was home financing during COVID-19. I hope everyone is safe and healthy, and not only your health, but also get your finances healthy. And thank you very much for joining us. I'm Janice again with Why Not? Like us on Facebook and YouTube, and contact Susan if you need her. Thank you very much and have a nice evening. Bye-bye.
Thank you.